You have got to see the technicals that I have prepared for you in this video because they can tell us what to look for on the charts in order to see what direction the market could go. And I spent a lot of time getting this ready, and I'll tell you what, I think you're really going to like the results of it. So we're going to cover SPY, QQQ, and IWM, the ETFs that track the S&P, the NASDAQ 100, and the Russell 2000 stocks. And well, let me pop this up here. And by the way, there's some magic for IWM at the end that I want to share with you. I think it's absolutely incredible. So what we're looking at, you can see I have price targets to the upside if we head that way, price targets to the downside if we head that way, and RSI up above 50. So momentum bullish, it's been rising. We crossed into bullish territory. However, not strongly so that we're there. I will say on the weekly and monthly charts, the momentum there also bullish. It has been falling recently, but right now, still in that bullish territory. Where do we find ourselves then if we look at yesterday's market close? Let me zoom in on this so you can see yesterday's candle that we have here because there's some important details. One, we are smushed right up against resistance, and in the pre-market hours, we're still pretty much in that resistance area. Now there's a 61.8 at 544 and some change, and that's where the pre-market is. We do still have the initial jobless claims numbers to come out at 8:30. So this video is being recorded before that, and that could be a pretty significant catalyst for us if it comes in low. Should be upward pressure for the markets. If it comes in high instead, it could be downward pressure for the markets. So now, mind you, high numbers would be higher than expected, or most definitely as we close in on 300,000, that would be something I think would be significant downward pressure over 300,000, certainly so. So there's a little bit of commentary on that. Now, what do you see this blue line that's right here? This is my 50-day simple moving average that's on here, and we got rejected off of it. We could continue that upward pressure on it. We do need to break above, and this resistance area that we have in here is also going to be critical for us. We actually have to make it above 546. If we do, we enter this nice little dead zone in terms of things to really stop us from floating upward freely. And that would take us to this price target 1 of 556. And that can really happen any day, any near-term week that we would have. I would say that probably in the next several days to, I would say, 2 to 3 weeks at a very maximum. But I don't think it would take that long. Look here, you can see one single day we can cover that ground, even though it's a pretty messy day to have that on there. That's why I say a couple days. I wouldn't imagine it would be outside of a couple weeks in order to get there. So if you look at price target 2, you can see that we have to swim through a lot of resistance that's up above in order to get there at 565. And we could do any sort of messing around, floating around in there in order to get it. And then further to the upside from that is that 582. Now, about the time frames for either one of these two, this would most definitely be, if we're going to travel to the upside on this, this could be easily several weeks onward from there, several weeks to a month or two until we could make it up to that point. Now, if we get some sort of rally, we could easily make it there in a couple of days as well. But I think that we do have some concerns out there that are going to mitigate the results that we have, that are going to make it really difficult to make it through this area of resistance. And that also contains the all-time high that we had for SPY. Once again, tracking the S&P 500. So are we in the environment now to see all-time highs? Honestly, I don't think that we are until post-election. I think post-election could be when that happens, but we'll wait and see. It could be wrong, and that's why I'm offering things to the upside and the downside and what to watch out for. So up here, I think this is a really good end of year number that between now and the end of the year, we can see that 582 if we travel to the upside on it. So you can see the resistance that we have to break through here. If we do that, we have that free flow area to price target 1. I think that's a really safe thing. After that, it starts to get a little bit harder to talk about what exactly could happen there. Now on the downside of things, if we get rejected instead, now we do have the 5 and the 13 and the 50 all about crossing. That's a bullish thing. RSI already talked about being bullish. So that's the bias I'm going into. But if we can't break that resistance, then we're down here instead. So that's a free fall area that we have with the 50 EMA in there and these other moving averages for more near-term price action to catch on to us and offer some support besides just some other technical indicators for historic support that are through here. So that price target 1 of 538, that could happen easily today over the next several days. And then this one here of 530, we have a lot of support to fall down through several days to several weeks. And then this one down here, again, I think that's that several weeks type number, but it doesn't have to be that long. This could easily be within a week if things don't go well. It could be within a day, a couple of days too. But I do think that we don't have that with what we have right here, unless things go really south for us really quickly. I don't know that we make that. Now, in terms of where we bottom out between now and the election if we travel to the downside. If we get rejected here, if support fails us, 510 is going to be really, really critical. And then just down below that is where we have the 200-day, which is really darn close. If I had price target 4 on here, it would be 500. So that would be also a number to look for. So let me zoom out on SPY. And there we go. And so you can see a little bit more of the path that we've been on. There we are. And we'll zoom in this way a little bit. Excellent. So the 3 price targets to the upside, we got to break this resistance. And then we should be easy to make price target 1 if we do. Price target 2 is going to be a little bit more difficult. Price target 3 is probably going to take a little while longer. It's a nice, easy way to think about it, even if I'm outside the window on that several days to several weeks. And then to the downside of this, I think we're in the environment now that these could be a little bit more accelerated than what we could see if we move to the upside instead. So be on the watch for these levels as well. There we go. Put that back. We'll actually lock it. There we go. Now I can't move it just by clicking around on these things. So that's what I think you should look for SPY. And let's move over to the Qs to see what the technicals are suggesting. You'll notice we have a fair bit more resistance here for the Qs leading up to price target 1, which also contains the 50-day simple moving average, and we have the 50-day exponential moving average, which is this red curved line coming down through here that we actually got rejected off of. The RSI is pretty much right at 50 as of yesterday's close. Pre-market hours, we're just a tiny bit above where we closed yesterday. So I think that jobs report, the initial jobless claims, I should say, is going to be that thing that's going to help us decide if we get that upward pressure or downward pressure. We can easily quickly fall down to price target 1 on this. That price target 1 is a 454, and I think it's going to take us a little bit to swim up to the top of this thing, 474. But those are the 2 prices that I think are the most likely to happen next, and then moving out from there into price target 2 on this, whether it's up or down. Now, if we make it up through here, we actually have a pretty free float up to 487 if we break over 474. So this tells you what to look for if we travel to the upside. Probably going to have a little bit of a fight, and then boom, blast off. 487 is going to be minorly important to us. We should actually have fairly good green lights up above that to get up to 500, which does, if I zoom out on this a little bit, take us back up to that previous peak, which is in there. And so in terms of end of year numbers, we have a lot of room to the upside of this before we really run into anything significant. We're going to have to find out where exactly the market's going to take us. I think that these 3 price targets to the upside, I think, are all ones that are more easily projected than what we would have, but I think we could end the year north of 500 if we end on a bullish note, and some of that is impacted by what sort of floor we get on that. If we're anywhere in these 3 price target areas on the downside of this, I think that makes it easier to hit those upside numbers on when we go back to an upswing, assuming that we would sell down between now and the election. I think is a high possibility that we would do so. So looking here, mind you, this price target that I have here coincides with this 61.8 that you see over here. 61.8 is a very critical resistance level. So from this most recent Fibonacci retracement that we have from peak down to trough down here, that 61.8 is very significant. So price target 1, if we get rejected there and sent back down and blow through the resistance that we had previously, and then down through the support, which that's a big area of support in there as well. 38.2 is also very important. Losing that as support starts to send us down to these other ones, and that thing, we could drop relatively fast. We're looking for higher highs or higher lows. It would be nice to have both of them so we could trade sideways. It's one that we could move down further, one that we could move up further. But these price targets and some of the areas of support and resistance at least tell you what to expect in there. Price target 3 does not actually take us all the way down to this area of support that's down here. It's this 200-day, which we dropped down through and found very strong support last time. And you can see the support area where we got that touch, which coincides with some other historic supports that are out there as well. So if we break down through that 200 again, we could find support down below there. But if we break that support, that sends us down a lot lower, down to about 410, all the way down to about 406, 405. So that could make things really ugly for us if it should happen to go that way. Now, mind you, not all of this stuff on its own is really all that significant to look at that. In those ways, you also have some formations on here. We actually have a descending broadening wedge pattern to look at as well, which can be a bullish reversal pattern. So if we're able to actually break to the upside on this and break this trend line, which you can see, it's possible that maybe we already did. As a matter of fact, I like that right there. So maybe we actually started that and we're heading out more towards this price target that you have to the upside on this. So I have posted over at the Discord. That link for the Patreon, which takes you to Discord, is down in the description if you're interested. You can see my buys and sells. You can see my technicals before they ever make it to YouTube, so you get to see them earlier, so you can plan things out sooner, and that can most definitely help you out. Anyway, over there I said that I have a bullish bias for SPY and QQQ, so I'm looking to the upside on these with the potential that the downside happens at some point as well. So moving over to IWM, this one, where the heck did we find ourselves yesterday for the small caps, for the Russell 2000 stocks? We actually got rejected at the 50-day EMA, which is in red, the SMA, which is in blue, and we sat on support that's down here. So this resistance area, we got rejected, but we did close that support. So we found support here. And then it looks like in the pre-market hours, we're getting down towards the bottom of that support. We have a free fall area down through here with a little bit of support that's also in there on that 23.6. That's right in the middle of this. It is possible that we go down to this next support area that we have if we continue to the downside on the small caps. This one has an RSI that's down below 50 on the daily, but still above 50 on weekly and monthly charts. So the longer term trends, still bullish, declining, but still bullish. And then the more near-term trend that we have happening is that we still are experiencing some softness. Now, there is a rising RSI, just not over 50. If it happens to continue to fall where we start to lose momentum prior to this previous momentum loss on Monday, if that goes even lower, that can signal to the stock price to keep on dropping. We're down below this moving average for the RSI as well. So right now, there's a slight bearish bias to what's going on for the Russell 2000 stocks, according to what I see on the technicals here. So we'll see if they keep on selling down. And let's take a look at those price targets on here now. So for the price targets on this, price target 1 to the upside, 213, got to fight through that resistance to get there. This green trend line that's on here, that is something, I'll turn it white for you for right now. This is a very significant trend line that we have to the upside. And then there's also another trend line down here in green, also very, very significant. In between these two trend lines that I have here in white, this is where the majority, I'm talking decades long worth of price action happens for the Russell 2000 stocks in between these trend lines. Making it to price target 1 for those trend lines is very significant. If that is something that happens, if we hit up there, it's really only the most bullish times that we really get up here. And that's why this trend line is in red. I'll make it a little bit thicker so it stands out more. There we go. That can be a significant area of rejection, of resistance. You can see that the last time that that euphoria came in. And this is something that I did not zoom out far enough. I went out to the monthly charts. I'll show you that magic on here for the potential for rejection up here. So for this, right now, we are right smack dab in the middle of a bullish channel. So that is bullish on longer term trend. Near term trend, we're trying to find if that support's going to hold. If that support doesn't hold, then our next floor is down here in green and then down below there. So price target 1, we could be pushing down to 200 on this thing if we fall through this support that you find right in here. So maybe we catch the low 200s. Down below that, price target 2, about 194. Price target 3, about 188 to the downside. If we're able to break up above 213 where we find that trend line, we have to swim through more resistance to get to price target 2 at 217 and even more to get to 220. And remember, it's only the juiciest of times for the Russell 2000 stocks that we find ourselves at the top of that. Now, let me show you that magic here. Boom. By the way, if you guys want to learn to do technical analysis like I do, there's a course on it, a link down in the description. You can go and you can find that. I know there's a lot of mess on here, but pay attention to the trend lines that we have. As a matter of fact, here I'll start moving some of the other stuff out of the way for you so that you can see more about the trend lines that's on here. And we'll just get rid of that stuff. There we are. So now you can focus on what we have going on with the trend lines. Looking all the way back, this is a monthly chart. Every candle is 1 month worth of price action. Going back to 2003 up to 2007, we established this channel for the small caps between the dot-com bubble and the Great Recession. Great Recession hits, we sell down, and then that's where we start the very first point of reference that we have for this bottom trend line, which let's talk about that because we like to talk about bullish opportunities. Bottom trend line, rip. Bottom trend line, rip. Now, mind you, it was not a trend line yet until we got here in 2016, but this confirmed that's the trend line, that every time that we get there, we have this amazing rally back up off of it. And then we didn't quite get there here, but we had the 50 EMA and SMA, those 50-month moving averages, which also end up being, which you can see, they're also present here, they're present here, they're present there. They are very important to us in terms of getting that support coming in. So what happened here? This is COVID coming in. So we get the lockdowns, horrible for small caps because how are they supposed to stay afloat? They're not very good at staying strong at economic downturn. They came down to the 200-month. Look at that support that we found at the 200-month. And then from there, ripped back up through that historic support that we had right here and then moved up to just outside of the channel and never seen before. And that is most likely where you started seeing a lot of people start stepping out of that because we had no historic reference for it. All right, so look at the majority of the price action between the white moving averages that we have here. That's your bull channel that you're looking at. Anytime we're below it, there's usually significant upside to follow. Anytime you're up above it, there's significant downside to follow. And nothing was really more painful than what we had right here where we were up outside of that bullish channel entirely when we look at this, where we had no frame of reference. Nice thing is from where we're at right now is that we actually have a frame of reference to refer to. So some other magic for you, just to share this, because this channel is about information, education. If I put on a Fibonacci extension onto this, because I mentioned about the 61.8 before, so two things I want you to pay attention to as I draw this on and we get these gray lines coming up are whole number values. That would be 100% of this movement in between these first 2 points that you see on here. So that same height that you make, every whole number value of that is going to be significant for us. And then also the 61.8s are also going to be significant for us. So we make about 61 to 62% of that retraced value. So about 60% of this move that you see right here. So the 61.8 is right there. So from this bottom line up to that distance is an important distance. With that said, even going all the way back, this thing is from 2002 to 2009. So keep in mind how old that is. That goes anywhere from 22 to 15 years back in time in order to establish this. And then it just has rippling effects moving forward from there. So I'm going to snag this tool. And what I'm going to do is I'm going to put on that peak for you. And there's that one that we're looking for. That's our first whole number. And that's that peak that you saw me draw on here. And you'll notice right here is where we kind of get that peak. Let me change this to, we're going to go wider and we're going to turn it into a bright white for you so it really stands out. So when is the next time that we really find a lot of significance just from that one Fibonacci extension? Well, let me grab that tool again for you. And right here is the 1.618. So there's that 61.8 that I was talking about. And you'll notice we have significant price action that was predicted as resistance back in 2009. And now we're seeing it. We got near it in 2014. So 5 years later, half a decade later, then we see it again in 2015. And then what happens? We get rejected off of that. So that tells you where that top is. And you can see it still as we move on from there. I will draw this on for you because this is the next whole number. This is now the second time that we've made this distance. So there's the first time we made that distance. Here's the second time we made that distance upward. And when you look at it, we got resistance, we got support sitting on it, and now we're all the way up in 2017 to 2019. So anywhere from 8 years to a decade later, and that technical still holds. Moving forward, let's go to the 2618 because what you'll notice again, look at the 2618. That's where we find about where this peak is. We didn't quite make it there. Mark has sold off for the Russell 2000 stocks. Look at all the contention that you have. Now, mind you, there's other things that we can bring in. This is just using a single Fibonacci extension, but look at all the mess we had around that 2618 level that we have. Well, where's the top of all this mess? That top is at 3. Now, the third time that we see that distance covered going all the way back here to this original part that we had from 2002 to 2007, and still, where are we at in the timeline? 2022 to 2023. So we are 13 to 14 years later, and we're still seeing reference to that. And then what's up here at this previous peak that we had? That is the 3618. So the 618s, if you're wondering, are they significant to pay attention to? Absolutely. Are they the only one from Fibonacci retracements and extensions? No, the 38.2 and the 50 are also two very big and important ones. But as we take a look here for what we have. As a matter of fact, if we put the 38.2 or the 50 on here, we might find out that that's where the bottom is on these. Matter of fact, I'm kind of curious to do so. So being that it's about halfway between this one and that one, I'm going to say it's probably the 38.2. We'll check in just a moment. But the 3618, so we made 3 full leaps like we did in the early technical a long time ago, over a decade ago. And that's showing us where the resistance is, or where we found resistance, I should say, for this peak. And then up here is going to be another critical value as well. Even though I don't have it currently drawn on here for you, that's probably one of the 786 lines or something like that. And then over here, not only did we not break that trend line, but you can see we also didn't quite make it to the 3618. So what happened? We fell back instead to this whole number of value almost perfectly. So remember, all of these white lines, these thick white lines, are old. They were born back in March of 2009. Well, they started, I guess, that in their infancy. The date of conception was November of 02, and then going all the way forward until we get to March of 09. That's where that whole thing was born, but yet it lives on 15 years later from March in 09 until now, and we're still seeing its effects moving forward from there on the monthly chart. So I know that this kind of went long, but I think it's at least worth watching. As a matter of fact, let me put this last time, I promise. Let me put this back up here for you. I'm just super nerdy about this stuff. And let's go one more because I really do want to get the other value in there, the 382 value in there. So let's just go in here and we'll just change this one to 382. There we are. Press OK. Boom. Look at that. Oh, that is gorgeous, guys. Let me zoom in because I don't want to miss it. So here's the 618, right here's the 382, and you'll notice where we found that significant support between those, and there is also the 50, which is almost in the middle between, which is where you find these minor supports that you see throughout there. So the Fibonacci extensions, highly important. It is pretty magical to watch the Russell 2000 stocks. They actually do move pretty predictably. We don't get that same sort of predictability with the Qs or with SPY. Look at the monthly chart on IWM. Use that as a nice guide for entry points, exit points, if you're going to trade it at all. All of this stuff, all your buys and sells are your own research and due diligence, but I will bring the information to you. And I do offer people to see my buys and sells over at the Discord, available through the Patreon. That link's down in the description. And if you guys want to learn to do technical analysis like I do, there is a course for technical analysis trading down in the description. It is clean, easy to follow, super straightforward. It includes a method for trading, the bread recipe, which is just so clean and simple. And a lot of people, myself included, are experiencing success using that bread recipe method. And there's even a chapter in there on options that I myself did specifically for that course. So check that out. Make sure that when you sign up, you use the code word doctor. It's going to save you a ton on that sign up, and it's something that can pay dividends if you really do commit to learning what's in it and sticking to it as part of your trading plan. Thank you guys very much for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.